Hello and welcome to FinTech Finance's virtual arena entitled Embedded Finance Today and Tomorrow. And on today's session, we are obviously going to be getting right at the heart of embedded finance, which is quite possibly the most exciting thing happening in finance today. And joining me, I have two guests right at the heart of today's topic. Joining me first is Lindsay Davis over at Atomic. Lindsay, how are you doing here today?
Doing well, sir. How are you? Absolutely
brilliant. I'm really excited to talk about this very customer-facing topic. So, Lindsay, for our audience who might not be aware, can you tell us a bit more about Atomic FI and really your role there, please?
Yeah, absolutely. So, hey, everybody, I'm Lindsay Davis. I'm head of markets at Atomic, where we build payroll connectivity to enable the largest neobanks to embed payroll access to financial data, as well as to set up and make changes to direct deposit. We work with 11 of the top neobanks in the US, including Chime, Moneyline, as well as Coinbase. I'm trying to remember our press release earlier this week, who was on the record and not, and as well as financial institutions, credit unions, community banks, and then embedded finance partners, banking as a service providers. My role is to evangelize what is a payroll API and how can people use it, and then use some of my previous work at CB Insights, thinking through the fintech trends to watch and where this whole category is going to go.
I completely agree. I'm so excited to get that insight. And I think we are going to be talking about that business side of things, especially when it comes to payments and payroll. And I think there's such a huge untapped market there. So it's really exciting to hear your guys' perspective. And also joining us here today is Steve Lemon from Currencycloud. Stephen, how are you doing here today?
I'm good. Good, thanks, Doug. Good to see you again.
Great to see you again. I think the last time we saw each other was over at Money 2020, which after 19 months of not doing face-to-face in-person events was quite a nice change. But Steve, could you tell our audience a bit about yourself and also a bit about Currencycloud if they haven't heard of you already?
Yeah, of course, happy to. So look, my name's Steve. I'm co-founder of Currencycloud. I run the partnerships and enterprise business. But Currencycloud, we are a cross-border payments platform. So any organisation looking to embed a cross-border facility to collect, convert, or make an international payment, we are the go-to embedded finance player in the space.
Yeah, well, with that in mind then, to kick things off, I think we need to really lay down and establish what embedded finance is. And Stephen, if I can come to you, what is your definition or Currencycloud's definition of embedded finance? And do you agree that it is a new concept, or have I got that maybe slightly a bit wrong?
Okay. So embedded finance, I don't agree it's a new concept, actually. I think in its first incarnation, embedded finance has been around for 30 years, maybe longer. My view of embedded finance, you remember the white labeled credit cards that we used to see, where I'm thinking of the GM card that was underwritten by MBNA, or you had stockbrokers that were, white label stockbrokers. You had a regulated entity providing the underlying service, but you had an intermediary providing the service to the customer. That in itself is a form of embedded finance, in my opinion. Although, in fairness, what we're contemplating now is probably a slightly different model, which is generally a technology-led proposition, and it's the proliferation of APIs effectively, and the platformification of financial services. So, any financial service and any financial product that can be automated and delivered via a platform through a set of APIs lends itself to being an embedded finance product.
Interesting. Now, I think you really hit the kind of the buzzword bingo there, and I think you are right though, and it's kind of led to some misnomers about what embedded finance is. But you've hit the nail on the head there. It really is this coming together of platforms being able to offer up financial services, and I'm really excited to see that. But it's really interesting to get that perspective. It's been around for 30 years now. What's changed then, Lindsay? Do you think there's been if it hasn't been a new concept, do you think that something's been driving the public attention towards it recently then?
Certainly, I fully concur that it's not a new concept. We've just recently labeled it and marketed it as such because it is a trend in style to watch. But embedded finance ultimately is just allowing non-financial businesses to team up with banks and or third parties to launch and offer a financial product. Now, what has happened is we've started to see certain verticals emerge as prominent with embedded finance, like payments, lending, and insurance. So I think that those categories have started to really establish themselves. And what's driving it is ultimately, I mean, some of it is COVID, and I hate to keep coming back to it, but a lot of things like commerce moved online, like in an aggressive way. And the report highlights that e-com in particular saw a massive boost. Well, the status quo was very small. So adoption, surged. And what's going to continue to drive it is the customer's expectations going forward. Like, this is how they're going to expect to engage with brands and their products, being able to shop first online, and then also the frictionless experience that embedding these opportunities within the experience allow.
Yeah, well, once you're embedded into these probably, I think for a lot of the financial institutions, they want to embed themselves in, well, obviously with such a highly regulated industry, in big brands, ones that they know and can trust. Now, with that in mind then, Lindsay, who are the key players in embedded finance currently? And since it's almost, as we said, it's only just reaching public consciousness, why haven't financial organizations leveraged their brands to take full opportunity of this opportunity?
So I'll unpack it in a couple of ways. So I think vertically, we talked about e-com in particular. Then there's the retail sector in and of itself, not only just shopping online, transportation and logistics. And then for what we're seeing going forward, like, why haven't people started to do this? I don't think they necessarily thought that there was room to grow in like a lending product. Say a bank wants to be the back end of that, and they probably are, but to be a marquee bank, they think that they have saturation in their existing to shift the consumer's behavior from a credit card to then moving and buying on buy now, pay later solutions that are embedded at the checkout flow. Like, it's an entire different psyche for the consumer. So I think that they're trying to, gauge to see, what are going to be the areas. And now you're seeing all the cards are getting very aggressive in buy now, pay later, and Square making that acquisition earlier this year of Afterpay is sort of validation that this is very much a particular area that is not going to go away, and a payment method ultimately long-term. Yeah.
And I think that the banks and the financial institutions, as you say, are realizing that. It's not something I seem to remember people thinking, is there actually a new market opportunity for Klarna, for instance? Is they going to reach a certain max point? But that whoever was saying that then, that must have had some significant lessons in that. Now, Steve, as well, I'm interested. You were bringing up some of the brands that were kind of leveraging those credit cards back 30 years ago, and I'm interested to hear your perspective on the brands for financial organizations and institutions when it comes to leveraging embedded finance too.
Yeah, so look, for me, I think this has come about. So financial services went through a great unbundling. And that was really, that's not a recent thing. I mean, there have been financial service organizations that have set up to really focus on picking out individual business lines that the banks were doing very profitably, but doing it as part of a broad lineup of, it used to be that you go to your bank for any kind of financial service. Post 2008, there was a lot of hot money floating around the system, and a lot of smart people wanting to set up specialist financial services organizations to do a better job than the banks are doing. A lot of hot money coming from VCs, investing in tech-led propositions, and it really is the proliferation of the API-led economy that's really driven this forward, I think. And we've come through the unbundling, and now we're going into like a rebundling. And as my friend Chris Skinner says, if you're a bank, there are 1,000 things that you have to do, and you probably do them all fairly well. But if you're a fintech, in particular an API-led fintech, there are 1,000 of them out there, or 25,000 actually. There are 25,000 fintechs out there, and they all do one thing really well. So the rebundling of financial banking as a service is a great example of that. It's bringing together best in breed providers of payments, lending, insurance, to Lindsay's point, and presenting the very best components to give the end customer a very consumable service. In terms of the brands, I mean, there are two sides to that coin. There are the brands, the constituent part of embedded finance, the organizations providing the underlying service, but also there are the brands that are now able to offer financial services as part of their brand lineup. It gives completely, again, to Lindsay's point earlier, non-financial services-led organizations the ability to offer banking services, payment services, credit card services.
That future is pretty exciting. I mean, that it almost seems absurd to think of it as the rebundling is the most exciting part, but previously for the last decade or so, you've been going to an individual fintech provider to sort out one pain point in your life. To now we're getting to the point where fintech has matured so much that we're getting to, as you said, this rebundling, and soon you're going to get this wealth of services as a retail customer, I want to say, almost, as well as a commercial customer as well. That is going to be incredible. And it's really, banking is getting exciting. With that in mind then, Steve, if I could stick with you on this question as well. If we look towards the retail bank's end customer, what are the future use cases of embedded finance that we actually might see? Big question.
I think we're already there. In terms of how expansive does this get in terms of financial services products. I mean, we've been talking about payments, lending, insurance, but there's trading. A couple of our partners, Drive Wealth and Alpaca and LVF, that they're offering Robin Hood as a service effectively. There really is no limit to the kind of financial service that can be provided in an embedded environment. But for me, I think the question should be more along the lines of what kind of organizations are going to get onto the bandwagon and realize that actually they could be the bank. I think in the years ahead, for me, it's about abstracting away the friction, the pain point in a journey. Nobody wants to go and take out a loan. Nobody wants to go and take out a mortgage. Nobody wants to go out and make a payment. They don't choose to go and interact with their bank to make a payment or execute an insurance policy. It's normally a byproduct of something that they're doing. So if you're buying a car, you're buying a car. You're not taking out a loan. You're buying a house. You're not taking out a mortgage, and the associated in insurance products that go with that. So I think in the future you're going to see more and more consumer brands in all areas, whether that be retail, whether it be automotive, whether it be big tech like Apple, Amazon is already doing it, Google's already doing it. I think you're going to see more and more proliferation of a transaction that just happens organically in the background without a conscious need to go and execute that transaction at your bank. I mean, we're already talking about it, aren't we? Alexa, can you do my groceries this week, please? It's happening.
Yeah, and if we thought payments were already becoming invisible when it came to contactless and e-commerce, I mean, soon you're not even going to be thinking about making payments. And I'm really wondering what that's going to be doing for Gen Z and beyond. That's absolutely fascinating. Now,
well, the ultimate example of not even thinking about payments is Uber. Yeah, Uber is the most prolific and most well-known personification of embedded finance. If you think about the status quo before, you're in a restaurant, it's Friday night, it's the end of the night, it's pouring down with rain, you don't have any cash, you've got to walk out into the street, you've got to find a cash point to get some cash out, and then you've got to hail down a taxi. By the time you get the taxi, you're soaking wet. Or alternatively, you can call up a car on your app, it turns up, you can see when it's turned up, you get in the car, it's like somebody's giving you a lift home, you get out, you don't pay for it because it just happens in the background. Yeah. That's embedded finance in action. That's
incredible.
And if it's raining and you don't want to go out, you can just do Uber Eats.
Yeah, exactly. Yes.
And if you're a driver, you can get paid out daily.
There we are. Yeah. And it's just this, it's across the whole value chain because it impacts everyone. As Lindsay, you were saying there, it from the driver all the way down to when you're having
going. Roots spun out of Uber. It was an insurance business. They want to give the drivers loans for auto. Like it is a fully fledged embedded finance company, and they're fine with that. Yeah. They use Stripe for the payments. They'll process whatever, because at the end of the day, it's about providing the service and becoming and staying the market leader, because there are a number of competitive forces out there.
Yeah. And with that in mind then, Lindsay, let's look to the kind of the business side of things rather than the retail customer side of things. And I'm really interested to look at what embedded finance can mean for small, medium enterprises all the way up that chain, really, to larger organizations too.
All right, from the small, medium-sized business, I think for the retailer to be able to offer a buy now, pay later to an end consumer, it's their ability to improve the lifetime value of that consumer and then also reduce the friction and lead to a higher, conversion rate if they're shopping potentially online. So from that perspective, like that's one angle for the SME. From a lending perspective, embedded, finance opportunities for them to get access to a loan, as we were saying, like it's not easy today for a small business to qualify, to be underwritten, and to have to physically walk into a bank branch is onerous. And then there's the data connectivity side of things, being able to get access to that small business's, hub of data that lives in other financial products and services via APIs. That enables them to run their business more seamlessly, and then of course decreases their cost of operations. So there's a lot of angles that can be unpacked here.
Yeah, and one that I think we're kind of hedging towards, but haven't actually spoken about, that I'd love to explore a bit further, is, Lindsay, what can embedded finance mean for financial inclusion across all elements of finance?
Absolutely. I think one of the leaders in this, if we weren't thinking about Uber, would be in Southeast Asia with Grab and Gojek, and moving a fully cashed economy online, and then also offering them essentially bank accounts. This is a huge opportunity for the actual unbanked populations of the world to access financial services that are fair and transparent, trusted, and truly don't charge them a thing because they're embedded within an experience that they're already coming to love and trust.
Yeah.
I think that there's endless possibilities here, and it's easier to move. And I think we'll talk about the barriers next, but when you have an open banking framework, such as Europe's, open banking and the PSD2 of Europe, there's an opportunity for these fintech companies to go to market and build these products and services. In the US, we're pretty hamstrung because we don't have it, and it's been pretty disjointed. And I'm sure anyone that's come to expand here has recognized that. But if abroad, the regulators are actively empowering fintech companies to build these services, and it's a huge unlock at the end of the day for end consumers.
Yeah, that connectivity is huge, and I think the 50 different markets within one country is a very interesting dynamic to then have to work towards when you're trying to open up finance.
I can tell you all about how payroll works in every state. It is
my gosh,
it is not interoperable, and it is also state by state.
Wow.
Fun times.
As an organization trying to operate a payments business in America with 50 licenses in the 50 different states, and
then trying to move those monies from those states to outside countries, that is a new layer. Yeah,
it's painful.
But I guess that really does underscore really how important it is for businesses and the opportunity to embed finance and open up those channels.
Absolutely.
And so, Lindsay, you were kind of, starting to bring up various different geographies. And I think that the Grab and the Gojeks of the world are such a brilliant example of it. But, having experienced myself, it is truly incredible how you can get on a motorbike, taxi, and then immediately already have your food delivered to your door, and then also make payments as well, and also buy rail tickets. It's all on one platform. And Stephen, you were bringing up as well platformification earlier in the conversation. It's so important. But the question that I think that leads us on to is, what geographies are taking the lead when it comes to embedded finance, and why? Lindsay, I know obviously you brought up an example. I'll come to you later if that's still your preferred choice. But Steve, your perspective, please, when it comes to which geography do you see as the winner?
That's a really tough question, actually, because
there's no easy questions here.
Yeah, well, the obvious answer is look at China and the super app.
Yeah.
I mean, that's the obvious answer, but it's almost a cliche. But there's no doubt that fintech is very, very prevalent in Europe. But all the big tech companies, Amazon, Google, Facebook, Uber that we were talking about just now, they all have embedded finance plays, and embedded finance is a lot more prolific than people realize, I think. E-commerce sites, it's just what click to pay, that's all embedded finance. It's everywhere, and I just think in the fullness of time, for me, the big implication here is the prominence of your checking account, your banking part, your as a consumer, the prominence of your bank will just fade into the background. Nobody interacts with their bank because they want to interact with their bank. They interact with their bank because they're doing something else. And the more prolific embedded finance becomes, the more marginalized the banking brand becomes. And that for me is the interesting thing.
is really interesting, and I imagine it's got quite a few banks sweating and suddenly looking into in how they can leverage embedded finance in more successful ways with their own branding. And I know, obviously, sorry, Lindsay, you did mention Southeast Asia, so I will throw the question back to you. Stephen brought up China, their platforms when it comes to Weixin. It's just incredible.
WeChat and Tencent, I think, were the pioneers really of the super app model that translated over into Southeast Asia with Grab and Gojek. Then you've got the food delivery companies like Rappi in Latin America. I think, again, when it comes to having the ability to unlock, access to financial services, like regulation and compliance with those regulations are ultimately paramount. And you're starting to see companies getting hit with the, initial blowbacks of GDPR. We're starting to see, the California, states adopt a similar style model with CCPA. It's going to become much harder to, get up and running. So I know that there are several of these different styles of embedded finance companies, but I think that there is going to be a petering out for the ones that don't understand the regulatory frameworks and the complexity of it. You can't just, yes, maybe you can build an API, but you're playing in people's money and you're playing with their, non-public information.
Yeah, some of the compliance around payment service data is just absolutely so strict, and to mess around with that because your fintech isn't looking at compliance as well as it should, I completely agree. It's a massive game changer. But also, if we continue with the geographical theme there, and Lindsay, you're bringing up how some organizations or platforms will fall to the wayside. I'm interested as to why we've seen different geographies, Lindsay, not catch up with others. When we saw, for instance, here in the UK, when we saw the success of Weixin, why didn't a similar organization come out from that? Why didn't we get, for instance, I know you've got Uber Eats and Uber for your food delivery and also your transport, but that level of embedded finance goes even further beyond, as you mentioned with the Gojek. You can, for instance, get your rail tickets. So why is it not just a simple copy and paste formula, or is it because of payment culture around the world diverging and people's acceptance of these platforms that regions must take a different approach? Is it just the kind of regulatory landscape? Yeah,
I believe it truly is culture. It has to do also with the pain points on the ground. Again, for somebody that is in an unbanked economy and they're using cash and they're relying heavily on it, or they're dealing with hyperinflation in the areas in Latin America, you have pain points that need to be addressed, and say embedding my rail tickets is not going to be the thing that I need next, right? So paying attention to the consumer pain point. I've already harped on regulation and open banking frameworks that are adopted by local governments to encourage innovation and to break up bank monopolies. Those happen locally.
Yeah, and those local hurdles must be, for organizations that are looking to open up finance across those boundaries, must be so hard. And Steve, do you agree with Lindsay there when it comes to regulation being so key in effectively not creating laggards when it comes to embedded finance, but at least presenting themselves with individual hurdles that need to be addressed?
There's no doubt the regulatory regime is different in every country of the world. It's not just we're talking about payments. It's not just regulation. It's the different payment schemes and way that the banking environment operates in different countries. Everywhere is different, and the complexity is working out how you knit them all together and create a universal translation layer, so to speak, to make them all play nicely together. It's something that challenges us on a daily basis. It's really hard. Yeah.
If I can add on to that, actually, you bring up a great point. It's also about the technology and the infrastructure in place. So when I mentioned Latin America and unbanked economies, it's primarily because they don't have the infrastructure. So they're skipping, this middle layer of physical bank branches in every single town, and they're moving straight into an embedded finance app and product. They're no longer, they're going straight from cash to cloud. It's pretty incredible. So it depends on, the ability, of course, then to access the payment system. Like we're still on ACH here. We could do real-time payments, but we don't do it. So that creates friction in terms of, we deliver this, to our customers in real time, but you can't do that here. You can say that you process it in real time, but it depends on what's happening in, truly like the piping of the system. And then boots on the ground culturally. having a team, if you're going to expand from another country, like you need to have a team on the ground that understands the lay of the land and is a point person for the country, the regulators, if you're going to be successful. And Currencycloud has done that.
Yeah,
I couldn't agree. I couldn't agree more with your point on legacy challenges. You know, the fact that you are incumbent in a market is not necessarily an advantage. Yeah. Just look up. You're using South Africa as South America as an example. Look at Africa. Yeah, Africa didn't have most of Africa didn't have a branch network, didn't have a banking network. So many people in Africa across the continent are unbanked. But the massive rise of telephone-led services, M-Pesa in Kenya, it's got something like 75% adoption, which is phenomenal. There are more mobile phones per capita in Africa than there are anywhere else in the world, maybe excluding Southeast Asia. But that's because there wasn't an incumbent legacy infrastructure to usurp.
I mean, hearing about these high growth opportunities and locations that are going to have been able to leapfrog the kind of the slower growth, more mature markets is so exciting, mainly because I'm excited to see some of the innovations that could be replicated here. Obviously, as we said, we've talked about the lack of infrastructure, but also being burdened with that infrastructure presents itself with its own challenges, as some of the more traditional institutions probably have found out from this opportunity. So, Steve, I'm really interested because I don't know if it's fair to say, is it too much doom and gloom to say that the opportunity for banks or financial institutions has gone, and realistically embedded finance is only going to serve large non-finance platforms that can take advantage of offering up financial services?
No, I disagree with that. I think the name embedded finance, it talks about embedding a financial service provided by a fintech or an incumbent into a non-financial brand. That's what the term implies. But actually, for me, embedded finance is much more prolific. We were saying earlier that embedded finance has been around for 30 years, and I gave the branded credit cards example, the branded stockbrokers example. But actually, banks have been exchanging financial services with one another, and they're consuming different financial products from one another for the beginning of banking. Embedded finance really is multifaceted, and I just think it's just going to become more and more prolific and easier to do with to hit the buzzwords again, the further platformification of financial services, insurance, all facets of it. And at base level, it's the rise of the internet. It's the rise of communication capabilities through the internet, and the increasing speed and reliability of that is now making it fit for purpose.
Yeah, because I mean, once that was such an analog system, and Lindsay, I hope you don't mind me throwing the American kind of payment system. I honestly thought that the pandemic would probably kill the check once and for all slightly, but lo and behold, we didn't see that happen. But to Stephen's point, the internet has really just opened up finance in ways that digitization in its typical form just wouldn't have done. And then the pandemic came and accelerated that. But I want to hear your perspective on it as well. Is the opportunity for embedded finance firmly with non-financial organizations, or is it with fintechs and banks?
Oh, it is with the fintechs and the banks. For certain. And I don't know what Stephen's answer was. So hopefully that created some friction, because we've ultimately agreed on everything. I thought I was going to come on here and be the anti, but we align on a lot of things. And the reason that is because these businesses are doing this, it's a means to an end to embed a product or service, but they're not ultimately trying to be finance businesses. You're embedding it because you're trying to reduce friction, increase costs, increase lifetime value, reduce your operating expenses. You're not trying to be a bank. You're trying to, be whatever the next D2C consumer brand for, high-end sneakers. You're not trying to be the neobank of high-end lambwear sneakers. So the opportunity is with the companies that are focused and specialized on providing that service, and for then that retailer or whomever is betting that service or product to be freed up to focus again on execution and delivery.
And I think that, again, is Lindsay, you've touched on a point there that I think encapsulates what fintech was at the beginning, whereas it was enabling companies to go on, especially when it came to kind of business looking fintechs, to go on and actually concentrate on their customers, especially in e-commerce as well. You don't want to be thinking about a painful payment experience. You just want to be selling your product. And I think fintechs have long been doing that. And it's interesting to see that embedded finance, to your point, is just a furthering of that. So I've just got to mention to our viewers, obviously we had Lindsay drop out there, but funnily enough, they still agreed on it. So far, I think we've got every question. My guests have agreed on everything.
We should have set some huge questions up that we could have had an argument over.
Yeah, there's still time.
Well, to that point, then I guess let's kick off the last question to wrap up, which is ultimately the biggest one and probably the one which will have the most division. And Steve, what will be the next big leap for embedded finance?
Oh, who knows? Whatever Lindsay says, it won't be. No, next big. See, I don't think there will be a big leap. I don't. From where we are now, I think you're going to see continued progress. I think you're going to see continued expansion. There's going to be for me, it's the adoption of the consumer. And the consumers are not going to seek out embedded finance solutions. They're not going to say, God, you know what, I really wish I didn't have to deal with my bank. They're just going to be taken in and won over by the increased convenience that embedded finance solutions enable. It's the business models. For me, it's, there's no point running around talking about a technology. It's talking about the business model that it enables. Uber is the perfect example of that. It's a fantastic, massive step change to quote Peter Thiel, it went from 0 to 1. There's a massive step change from the old world experience to the new world experience. You just get in the car, you go where you're going, and you get out. You don't even have to worry about whether you've got means of payment or not. I just think you're going to see more proliferation of consumer convenience-led solutions. That for me is where embedded finance continues to expand. As for a big step change, who knows? Yeah, that's stargazing, isn't it?
Well, I think that's a good point, because the point about embedded finance is it is subtle. It is a gentle and also invisible process. So, I mean, Lindsay, I've also got to get your crystal ball on this. Is there going to be a big leap? Do you disagree? Is there going to be a huge one coming next year or in the next couple of months?
Okay, I have a bit of a negative perspective on this. So these big leaps, these big points of innovation, we've touched on them, but what have they been driven by? One was driven by a financial crisis, and one has been driven by a healthcare crisis. So if it happens in the next year, couple of months, it is because we have still not gotten our, variants under control. And it is a very severe thing. And yes, these are positive things that have been a catalyst for fintech, lending outside of the financial crisis, because consumers couldn't access traditional products and services, embedded finance and being able to finance a product online because they can't physically go into stores, opening a bank account because they can't go into bank branches. So it will happen. It will be driven by something potentially of another, but we're not out of the woods yet, right? So I think you'll see it potentially in the environment space, as we think about what is happening with global warming broadly, that we will have an environmental health crisis in our lifetime if it's not already happening at the local level with massive fires. There are ways in which we're going to see finance and financial services evolve as a result of these unfortunate events. But I think that we won't see a huge shift until something like that happens, or some marquee piece of regulation that can, the executive order, for instance, in America that had opportunities to open up financial services and products, but it was basically, POTUS saying you now have mandates, each agency, to go govern as you see fit. CFPB in particular could be an unlock for us with the open finance opportunities as part of the 1033 of Dodd-Frank, but it's been a decade in the making. So progress, it looks like, could be something that unlocks overnight, but it took a decade.
It's quite a sombering thought, isn't it, that finance can only evolve in the face of absolute failure,
chaos.
And chaos.
Crypto adoption as a result of hyperinflation in Venezuela. I mean, these are things.
Here's the thing. There's another financial crisis coming, and it's going to be bigger than the last one. So maybe there is a big step change coming. Who knows?
Oh my goodness!
I wanted to be cynical and say something about, like Uber Eats going down.
Well, that leads me to a point I might make in the fact that, well, hopefully, if embedded finance is linking non-financial companies who are very customer focused and love being very customer forward, maybe they might be the ones to carry embedded finance forward and start thinking of financial products that maybe the financial institutions hadn't thought of themselves. But that
we saw it. We definitely saw it. I would say just a positive. We got to end high, guys. We can't end it super low. I would say.
I'm trying to. Let's bring it up, please, Lindsay.
I know. If you look at what happened with government stimulus programs as a result of watching happen in 2008. We did not move money fast enough, and people suffered. Now. They've learned that lesson, and we built these programs, and granted the portals were not perfect, but distributing funds to small businesses when they needed it most, passing government stimulus, like governments took action globally, and fintech facilitated that. So it was really like an opportunity to shine, and there is more trust in that system now.
Yeah, and seeing here, especially as well in the UK with some of the fintech banks leading the way with Sybils and Bibbles, it was absolutely amazing. But guys, I think we've come to time. We've actually gone slightly over, but I just want to say a massive thank you and thank you for bringing the optimism back at the end there, guys. But I also want to say a massive thank you to our audience as well. You've been absolutely brilliant over the last 2 years. And as well, you can catch the rest of the series and much more over at www.ffnews.com and of course YouTube, but especially LinkedIn, where you can see me in the comments and have a chat. But I've just got to say, Steve, Lindsay, thank you so much. It's been an absolute pleasure. Brilliant insights, and thank you very much and have a good night. Goodbye.
Thank you.
Cheers.